Welcome to the Full Tracy Money Audio Commentary. This is Owen Tracy recording. It's 3:38 p.m. that is Central Time. Today is June 3rd, and it's a holiday tomorrow in the USA, so I'm going to do the big picture long-term audio and video for the various different asset classes today. I'll be taking tomorrow off. And when we think about what's going on in the market right now, then a lot has hinged on the outlook for interest rates and the outlook for what the market can expect from the big, beautiful bill, which looks very likely to be signed into law tomorrow. So the immediate reaction was for the stock market to rally, for bond yields to rise, and for the dollar to be slightly steadier. And then we didn't have quite the same need for havens, so gold and some of the precious metals were in negative territory, not though in an especially dynamic manner. Then we've seen that the uh, signing of the trade agreement with Vietnam has been received positively by the stock market there. We're in a holding pattern, I think, in European markets, but the majority were in positive territory today. The IBEX in Spain was up almost 1%, was probably the best performer for the region. Then, when we think about Asia, the Nikkei was rebounding today and is above the 40,000 level on the futures contract right now. And then the Hang Seng was mildly negative. The mainland market was mildly positive, and the Australian market was also mildly positive. As we think about how does all this fit into the big picture, the longer term environment, well, we can think about two important points. One is that trends are consistent when there is an imbalance between supply and demand. And in order for a trend to persist, then you also need money. And money supply growth, whether that comes from the government, from the central bank, or from bank money creation, it's any one of those or a combination of those are required to sustain a trend. So all we have to do then is to look at the consistency of the trend as well as where the money is likely to come from. Well, when we think about what that means, well, you look at the big beautiful bill, it's going to add over 3 trillion to the deficit over the course of the next decade, which is basically about 350 to 400 billion a year in additional spending. Well, that's perhaps not as much money relative to the price levels as it would have been in the past, but it's still a sizable chunk of cash.